एट द एंड जो भी VC इन्वेस्ट करता है लास्ट में, सो उसके दिमाग में क्या होता है कि दिस कंपनी इज गोइंग टू हैव एन IPO. उसके दिमाग में IPO होता है क्योंकि अब उसका कि उसका नया राउंड रहता है कि दे
देखिए
नीड टू.
टिपिकली अगर एक वीसी इन्वेस्ट करता है तो 2 या 3 राउंड करते हैं सक्सेसफुल इन्वेस्टमेंट के अंदर. उसके
Right.
बाद उसका राउट यही होता है कि इधर अ प्राइवेट इक्विटी फंड कम्स एंड बाइज स्टेक,
Hmm.
या उसके बाद यहाँ कंपनी उस स्टेज पे पहुंच जाती है क्योंकि कंसोलिडेशन इज अ स्टेट
Right.
which every sector has to go through. We have seen this in telecom, we have seen this in digital e-commerce verticals,
Right.
etc. सब जगह कंसोलिडेशन एक फेज के बाद आएगी. So there is an opportunity of putting 2 and 2 together where 2 and 2 can become 5, not 4. So they will consolidate and put together and exit. That is one way of exiting it. The other way is private equity or a buyout fund, or there would be multiple outside investors who are betting big time on Indian economy or Indian consumer sector from that perspective, and they would probably buy you out at that point in time. And the lastly, if nothing happens, then the IPO is the route to exit. Or
Right.
you can probably choose not to take any other route except the IPO route to exit.
Right, like most of the startups out there, like in Paytm and Zomato, they took exit after the IPO, and
Right.
that made that particular company to
Yeah,
fall
but
into something.
but the initial investors exited early as well.
Initially,
So initial investors, but the last investor who would pump in money, who has got the deepest pockets, would probably exit at the IPO route. IPO route, maybe there is a book building process, then there is certain period you can't exit. There is a lock-in period. After that, you will exit over a period of time. So there is entire gamut of things which would need to fall in place.
Right.
And so all seasoned investors have looked through the journey that what is the right stage to exit. So it's like a stock market, never buy. You will always anticipate कि अभी और बढ़ेगा, और अगर मतलब पब्लिक मार्केट में जब गिर रहा है तो उठा लूँ तो पता नहीं कितना गिरेगा. So you need to fix your returns, that how much at what point in time you need to exit. There is no point being greedy. You may miss some, you may lose some, but at the end of the day you need to be sure that how much return you are comfortable and what is the risk appetite, even as a fund, as an investor, you want to take.
Wow, such a great insight, sir. So just wanted to ask this thing, which according to you, which one is having the less risk, angel investors or a VC? Because angel investing, we know that they'll get a return in 2 or 3 years, like mostly 5 years, like खींचा भी तो. But in VC, like आप invest ज़्यादा करते हो, you need to invest a lot of things. And I've also heard one thing, when VC comes into your table, they want all the investors out, like they are like spending too much high amounts into the table.
Right. So see, obviously before the product market fit कोई भी invest करेगा concept stage पे, angel investment उसका risk सबसे ज़्यादा है because it has not been proven whether you would work or not. And if the VC comes after the investment has been done, or even the angel investor comes after the investment has been done, and the product market fit is achieved, तो risk minimize हो जाता है, but it's not zero. At the end of the day, it still stays. मतलब some of the investments after the seed investment, after the product market fit, may also not work because of multiple reasons. But if the VC fund after a certain point in time wants to clean the cap table, it is good in the interest of the angel investor because they invested at a certain stage and they are getting probably a 20x or a 30x, and in some cases I have seen even a 100x return.
Wow.
When they exit a venture. It's good for them because anybody would like as a VC fund, anybody would like a substantial stake or a certain stake in their mind, because that is their thesis. I need to hold this much of the company, and the company may not need that much of primary capital for infusion to happen. So the other way is also to mix the primary and secondary. That also keeps the blended valuation for a VC fund down, because secondary will always be discounted where the angel investors would exit as compared to the primary round, because they are getting an exit when the exit event has not actually happened. So their risk gets mitigated by monetizing the investment. So I think in that case it's a win-win situation. I don't find any harm in exiting in investment where a strategic is coming into play, because after that it is his or her journey to take it forward, and with the founders obviously. And even if a VC funds want a significant stake in the company, say 15% to 18%, unless there is a space for a VC fund, nobody else will put in money, then you will always be stuck for an investment to exit route. So it is
Right.
better to exit at the right time. So
Mhm.
I don't find this thesis to be wrong, to be honest.
Mhm.
You need to exit at the right time, and which you can
Right.
probably take your principal back. You may not exit fully.
Mhm.
Some VCs may ask you to take the full back, because at the end of the day, too many people on the cap table for managing the various compliances also is an issue. Board meeting करनी है, shareholders meeting करनी है, सबसे approval चाहिए. So I think if you want to run the company efficiently, after a certain hump is crossed, it is good for the angel investors to take an exit. They monetize and they can redeploy the capital into the earlier venture. And for the VC fund and other investor, it is okay to have less people to probably talk to get into the shareholders meeting and aligning. Otherwise, the founder, it is tough for the founder rather than a VC fund. Founder gets dragged from multiple people. Even a small check holder would ask that what is happening. So probably that is okay for a founder's interest also to give an exit to the angel investor, and that's something which founders probably have a moral obligation also,
Right.
from where they have taken money to provide them exit.